following is an updated and technical analysis on crude oil West Texas Intermediate Futures here off the daily interval where I had mentioned on the 9th of August 2023, we're trading spot price $84.17 a barrel, honing in closely to the 85.72 price resistance, and it would be time to, as of now in that previous video, to scale in, begin the objective short trade entry on a scale in process for a move to the downside on a rechallenging of the 82.61 price support, where we had extreme bullishness across the board within the mainstream media, CNBC, FOX Business News, just all out extreme bullish sentiment within the oil markets. And now that is beginning to wane. You have, with additionally the OPEC production cuts and the all-out utilization of global inventories across the board, the release of the Fed reserve minutes revealed a split among the members regarding additional rate hikes, just all-out tampering with the hopes of a economic slowdown and or soft landing. And you had additionally the China's recent huge oil consumption country of the world, massive macroeconomic data that had taken a significant hit, leading major government entities to appeal for funds, practically just begging now over there in across Asia, begging funds to withdraw and withhold from selling. And the Hang Seng Index put in a big sell signal on the daily. I'll try and cover that additionally later on. And just a all-out bad, dark economic structure going on over there across the pond in China. And that was a split where we took out the 82.61 price support. And here's the update. The entire trade from that pivot point on, nothing but about 4 or 5, a whole week of red days there. The entire trade was good for a 7% crash in the spot price of crude oil futures there. And I've added additionally this new call it minor support, 78.98 price support, additional reactionary lows, cuts through a gap, top of the gap there, and just some wick reactions right across the board there. And I would put some significant odds that is a renewed price support level. Whereas we were scaling in short here, bounced right off the 82.61 price support, especially if you're an active and or day trader there. That netted you just in a single day there, close to 1.5% scalp on the day, and just completely crashed right through it. The following day, ended up back testing it really to the butt end. Again, if you're an additional objective short trade, a day trader there, that was good for a very much larger move to the downside, testing that key 2-day continuous sell-off for 4.5% crash to the downside. Coming in, honing in on that 236 retracement, which was shy from being hit. I had mentioned a potential retest of that key inflection point. And as for the initial bull case scenario here on the longer term interval, you could spell out a continuation, bull flag continuation pattern right amongst this key inflection point, just measuring the technical dynamics, structuring of the underlying price action, where you have this first initial bull flag, and every once in a while you'll come across a technical triple wave of inflection point of an additional bull flag continuation pattern, which could usher in a huge ton of buying and short covering, where we are just marked with a ton of haze as of now on where the underlying trend will take us. I'll zoom into the USO, United States Oil Fund, here off the 1 hour interval, where additionally I see some sort of key inflection points to watch here based off the hourly, where we put in these nice divergent high. We had negative and bearish divergences really felt across all three key technical momentum indicators, and had that breakdown sell signal, ended up putting a nice continuation back test, and that was good for another big drop, bigger move, much larger move to the downside. I have additionally this primary minor reactionary high downtrend line off the mid-August reactionary highs, with the 50 hourly moving average hovering in close to synchronization there. Bull traders, long traders want to see a solid pop right back above that key inflection point into the $74, $75 range to potentially challenge some of these bearish divergences amongst technical momentum indicators, spur health right back, hill out the zero line thresholds there, whereas you have the oscillator histogram starting to print green candle close up above. Short sellers that want to see this negated, they want to see a complete wild volatility of rejection here for a potential stronger move to the downside, keeping these negative and bearish divergences intact for a much larger drop to the downside. I have to admit the price action has been extremely bullish, where these dips have been bought with velocity. Each time we've had a inflection point and or move to the downside, it has been just gobbled up by bull traders and or long traders there. But again, just some key inflection points to watch if you're looking to trade the spot price of oil. Not a clear, decisive direction as of now, but again, just some levels to watch and respect. And if there are any drastic changes within the spot price and the technical structure of crude oil, I will keep you updated.